Today, we're diving into Roborock technology. They've just hit the #1 spot in global sales, which is a huge win. But here's the catch. That victory came at a massive cost to their profitability. So we're going to break down the data behind this critical moment. Is this a smart, calculated investment for long-term dominance, or is it a permanent risky shift that sacrifices value?
Okay, so let's start with the headline number. The first half of 2025 was a landmark period for the company. For the first time, Roborock became the world's top seller of robot vacuums, a huge operational success.
But when you look under the hood, you see this really stark financial paradox. While their revenue just exploded, up nearly 79% from last year, their net profit completely fell off a cliff, down almost 40%. This kind of disconnect, well, it raises some serious questions about how sustainable their strategy really is. And the market has definitely noticed. Just look at the reaction in September. The stock didn't just lag behind the broader CSI 300 index, it got absolutely smoked by its main competitor, Ecovacs. You can see investors are getting pretty nervous about that drop in profit. So how did we get here? To really understand the split between sales and profit, we have to deconstruct the super aggressive growth at all costs strategy that's driving these numbers. Looking at the data, it's clear that starting in late 2024, management made a very deliberate pivot. They made a choice. Forget about high profit margins for now. We're going all in on capturing global market share and boosting revenue. And boy, did they spend money to fuel that growth. Sales and marketing expenses went through the roof, surging by over 144% compared to the same period last year. A massive, massive investment. But you know what? That spending paid off in terms of global reach. Overseas revenue now makes up a full half of all sales. This isn't a domestic company anymore. They've truly gone global. So how did they pull it off? It was really a multi-pronged attack. In North America, they pushed hard to get into big physical stores like Best Buy and Costco. In Europe, they took a different approach, using things like pop-up stores to build their brand directly with customers. It's an aggressive and diverse strategy. Okay, so while those year-over-year numbers look pretty rough, if you zoom in and look at the quarterly data, you start to see some early signs that their margins might be starting to stabilize. And this is where it gets interesting. If you just look at their core robot vacuum business, the operating margin actually improved from the first quarter to the second, going from 15% up to 18%. This suggests that all that heavy marketing spend might finally be getting offset by the sheer scale of their sales. So management has laid out a pretty clear 3-step plan to get profitability back on track. First, they're opening a new factory in Vietnam to get around US tariffs. Second, they expect that as sales keep growing, they'll get more leverage on their fixed costs. And third, they're going to pull back from some of their less profitable side projects to strengthen the bottom line. Now, once you've hit #1 in your main category, you face that classic strategic challenge. What's next? Where does the next wave of growth come from? It's the big question, right? How do you keep that high growth momentum going after you've already conquered your market? Well, Roborock's answer seems to be building a whole new second pillar by jumping into a completely different product area. At the recent IFA trade show, they pulled the curtain back on a full lineup of robotic lawnmowers. And this isn't some random shot in the dark. They're basically taking what they're already amazing at, that super precise navigation tech, the RTK, GPS, and VSLAM, and their AI, and applying it to a whole new part of the home robotics market. This move signals a really crucial evolution in their strategy. They are deliberately trying to transform themselves from just the robot vacuum company into a broader home robotics platform company. The goal here is to create multiple pillars of growth and just fundamentally expand the size of the market they can play in. But of course, it's not all smooth sailing. Despite this exciting new direction, there are some pretty significant risks on the horizon that the market is watching very, very closely. First up, what if those high marketing costs never go away? What if that's just the new cost of doing business to hold on to their market share? Then there's the risk of a price war, especially in a competitive market like Europe, that could just crush margins for everyone. And of course, launching a new product line is tough. There are huge execution risks. And finally, some people are whispering about whether the CEO's focus might be divided by another venture he's involved with. And this brings us right back to the central question, the big debate that the market is having right now. Is this all just a temporary strategic investment phase that's going to lead to long-term gain? Or have they made a permanent value-destroying shift into what some people call profitless prosperity? So, at the end of the day, the data shows a clear high stakes gamble. Roborock has consciously traded today's profits for what they hope will be tomorrow's market dominance. The number to watch, the key indicator over the next few quarters, will absolutely be that operating margin. Its trajectory is going to give us the definitive answer as to whether this very expensive gamble is actually paying off.